What is going on, traders? Welcome to my channel. In this video, we're going to talk about the most popular setup amongst the price action traders, and that is the two-legged pullback. Now, it would be weird if market just moved in these V-shaped one-legged formation. This is not how market really moves. Market moves with corrections that are being printed on a chart. This is something like what it looks like in real life, and the two-legged pullback is exactly what the name entails, and it looks something like this. The first bullish leg is just a series of bullish bars making higher highs and higher lows. And once the first bearish bar breaches this formation and creates a new low that is lower than the previous bullish bar low, the first bullish leg is over and the first bearish leg begins. Bearish leg is just a series of bearish bars making lower highs and lower lows, and once the trend resumes and the bulls are strong and in control, this is the second leg starting to form. It is a series of bullish bars making higher highs and higher lows. Now, that is also what it's called a first and a second entry. First and a second entry is nothing more than just a first or second attempt by the bears to reverse the market and change the trend direction. If this is the first bullish leg and this is the first leg working higher, first trend, bullish uptrend, the first attempt, the first bearish bar that breaches this formation is a first attempt by the bears to reverse the market. As it fails and market keeps working higher, the second bearish bar that attempts to reverse the market is a second entry. So we have a bullish leg working higher, first entry working higher, second entry short. Now, why is this so popular and why does this happen? Think about it. This is tied down to human psychology. When we fail at something, do we just give up, or do we study hard? Do we work harder? Do we come back and then try it again? This is why the market moves in twos and why it is such a powerful setup. Now, do we care about the foundation of why this happens? No, we really don't care about that. All we care about is that it's making us money. When a novice trader first look at a chart, he'll go nuts, he'll go crazy, he won't know where to buy, where to sell, because there's so many legs working up and down, and it's really hard to recognize the two-legged move correctly. But here's the key why the two-legged move is so powerful and such a powerful entry. It is because we need to combine it with the key entry points. Key entry points are trend lines, support and resistance lines, and exponential moving average. This exponential moving average right here, this EMA, is a 21 bar EMA, and we use it as a supportive indicator. Let's go from the start and it will make much more sense, as you guys will see right now. The market started with a downtrend. How do I know it's a downtrend? Because prices are making lower highs, lower lows. I draw this trend line, this channel around this downtrend. EMA is pointing lower and prices are below the EMA. So we are clearly in a downtrend. Now, why do I draw this channel and why are we looking for these channels, which are key entry points? It is because the trend line rules, that is in price action. After prices will break the trend line, the traders will attempt to make a new extreme. This will happen if prices break the trend line. Don't just look for reversal straight up. Wait for at least attempt to make a new extreme by the traders. So as we have this downtrend working lower and we have a first break of this downtrend, remember guys, we just talked about the two-legged pullback. This right here is first legged move working higher. This is the first leg working higher. We have 3 bars working higher and a first bearish bar. We have 4 bars working higher and a first bearish bar that breach this leg. So this is the first leg move higher, and it is followed by the second leg working higher. Now, the key entry points are important because that's where the high probability setups occur. So we want to combine these two-legged moves, these second entries, with the key entry point. EMA is one of the key entry points. Since prices broke this downtrend and I'm expecting for traders to make a new low, I'm only looking for reasons to sell, but I'm not going to sell in the middle of nowhere. I'm going to sell at the key entry point. And this is the first leg working higher, pullback, second leg working higher. So the two-legged correction played out, and it's now safe for me to look for reasons to go short. The second entry triggered below this bullish bar, but remember, we are selling. So we want to see a strong bearish bar. So this was the first bearish bar that prices triggered below. First leg working higher, second leg working higher at the EMA. Quick easy scalp. Here we have another instance. We have a first leg working higher, pullback, second leg working higher. Now, I'm only looking for these two-legged moves when it makes sense, when I'm expecting some sort of pattern at the key entry point. I'm just not looking for two-legged moves all over the chart. No, I'm only looking for two-legged moves when I'm expecting a setup at the key entry point. And as the highs here make a nice geometrical formation, I found this bigger channel. And this is why I'm looking for this first leg move higher, pullback, second leg move higher. Once I see that the two-legged move finished, I know that it's safe for me to look for short. First entry short, pullback, second entry short at the EMA. And there is a little caveat to this. There are two-legged moves inside the two-legged moves. There's a two-legged move right here, and there's a two-legged move right here. But also this can create one single leg working higher and the second leg working higher. So there are two-legged moves inside the two-legged moves, but we're not going to complicate that. Two-legged move right here, two-legged move right here at the key entry point, at the key entry point. Now, remember when I told you about the trend line rules, when the prices will break the trend line, there was going to be a retest of a new extreme. So we have a two-legged move that resulted in a break of a trend line. I'm going to show you guys. This is the first leg working higher, first bearish bar that breached the formation, and the second leg working higher. Sometimes the legs are measured, sometimes they're not. That's okay. If they are measured, it's perfect. If they're not measured, that doesn't matter. So this right here is the first entry short, pullback, second entry short, second attempt by the bears to reverse this bullish trend working higher. And this is a high probability setup as we've depicted in the earlier part of the video. And we are expecting prices to make a new extreme. This is why I'm looking for the two-legged move, because we just broke this bigger channel and I'm expecting a new low. So this is why I'm going to show you once again, this is why I'm looking for two-legged move. And look what happened right here. Prices are broken lower, but we didn't make a new low yet. There is a strong support forming and there's a lot of buyers that are jumping into the market. We're not interested in going long yet because the overall trend is down and we are waiting for a new low of this channel. This channel was confirmed by the confirmation of here, and here we have a second entry long failure, but we're not going to talk about it right now. Once again, prices are working lower. I'm not measuring these legs working lower. Why am I not measuring them? Because I am not interested in buying. I'm only interested in selling, and I was measuring the bullish legs working higher. There's no point for me to keep measuring one leg working lower, second leg working lower. That's not going to make anything for me. We're at the lows, at the support, and I don't want to go short directly into the support. So we're bouncing at the support. We have a first leg working higher, pullback. We have a second leg working high. As the prices are starting to go sideways and we are starting to form a trading range, remember, I still keep that in the back of my mind. I'm looking for a new low of this downtrend and I want to go short at the top of the trading range. So what I'm going to do, I'm going to once again measure the first leg, put it here, and here's the second leg. But here we can see that the prices are working sideways. There's a lot of dojis, a lot of stims. This is what it's called congestion, and we don't want to trade this congestion. The better setup here is to wait for a lower high and a nice bearish move down, this easy scalp. But this two-legged move up, we would skip it because there's a lot of congestion and a lot of indecision in the market. But I'm just demonstrating there. First leg working higher, bearish leg, second leg working higher. And once again, I'm measuring it because I'm expecting a setup at the key entry point, which is this resistance, because I'm expecting for prices to make a new low. And remember guys, when I talked about the trend line rules, it doesn't just apply to these bigger channels, it also applies to the shorter term ones as well. This is why I have all these short term trend lines drawn here, because it works as well for the short term channels. Now, prices finally made a new extreme of this bigger channel, and after prices will make a new extreme, according to price action, there will be at least correction or straight up reversal. But we just don't want to be buying without a reversal pattern, but we also are not interested in selling yet because we already have a new low and the downtrend played out. As the market keeps making lower highs and lower lows, you have to switch your gears a little bit because there is something changing. We're supposed to go higher, we're not, and we keep making lower highs and lower lows. What it ended up being, you would be able to only find this channel after this confirmation. Because you have a confirmation right here, and it works nicely. Now, when prices made this confirmation, there is once again a first leg working higher. We have this uptrend working higher. We have a break, and there is a second leg, two-legged move. And there it is. First attempt by the bears to go lower, pullback. Second attempt by the bears to go lower. This would be a second entry short at the key entry point, but we're not trading high side hindsight, this would be too hard to trade in real time. Once you see this confirmation, you can also take the second entries in the opposite direction, meaning if we are in a downtrend, we look for second entry short, two-legged pullback to sell, but we also look for a lot of buyers to be trapped because a lot of traders are trading against the trend and they're going to be trapped on the wrong side of the market. So we're also looking for the failed second entries to go higher. It's still part of the two-legged pullback. Think about this. This is the new high. This high is higher than this high or this high. So I'm counting, my count starts over. Pullback, pullback. First attempt by the bulls to go higher. This, we triggered one tick above this bar, and this bar made a new high that is higher than the previous one, and it failed. It's just a first attempt by the bulls to go higher, and it failed, and it confirmed the downtrend. We're still in a downtrend. Price is pushed below EMA, which gives more credence to the setup that we are still in a downtrend. And a second attempt by the bulls to go higher. First attempt, pullback, second attempt. Good place to go short because we're looking for two-legged moves, but we are not looking to go long. Once again, we are in a downtrend. We're looking to sell. And the same thing happened right here. You have this two-legged move up, second entry short, but this would be too hard to find in real time. Once this high forms, you find the trend line, you have a new high right here, pullback. First attempt by the bulls to go higher, pullback, second attempt by the bulls to go higher, failed. Think about it, so many people are going long into this trend line. Failed two-legged move up, good scalp. Same thing happened right here. In this instance, you just have a first leg working higher. This is why we are not just selling. We're not just selling this entry. You could see and you could say to me that this would be a good scalp to take. It is off the key entry point. No, it's not. This is just a first entry, and a first entry can fail. Think about how first entry failed here, even if you have a break and a new low. First entries are not high probability setup. So we have a first entry short, but we're not interested in selling because we're expecting the second leg working higher, something like this. Since there is a key entry point, I'm probably thinking that prices will struggle to break below. So what I'm going to do, I'm going to wait for the two-legged move in the other direction to fail, for the failed second entry long. This is the new high of this move. First entry long, pullback, once again, below EMA. Exactly, this is what I'm going to see. Second entry long, failure. Two failed attempts by the bulls to go higher into this key entry point, failed. We're in this downtrend and price is made easy scalp. And once again, we broke this channel. So what is probably going to happen next? You guessed it, traders will attempt to make a new extreme. So what I'm going to do, I'm going to measure this first leg and I'm going to wait for the second leg working higher. But we didn't get it, and that's okay. I'm not just ready to sell yet. Even though I'm expecting a break and a new low, I'm not going to just sell. We can keep reversing from here and keep rallying up. We have a double top right here, and I'm going to wait for the same thing. I waited right here, I waited right here, and I waited right here. I'm going to wait for the failed second entry in the opposite direction. Pullback, pullback, first entry long. We just triggered above this bullish bar, failed. Pullback, pullback, second entry long. We didn't trigger above none of these bars highs. This was the first doji that we triggered higher. So this is why it is a second entry long. And think about this. Once again, we're below EMA. It is a good bearish pin bar in our direction, and prices confirmed they're working to make their new low. We didn't make a new low yet. Notice we are shy away from a double bottom. So in case I'm still looking for a new low, I'm going to do the same thing, very high probability setup. I'm going to measure this leg, first entry, pullback, perfect measured leg to the second entry. I'm going to mark just this bar right here. And this would be a two-legged move up, first entry short, pullback, second entry short. We have this trend line working higher, that break and a new high. So the trend line rules work even on a smaller time frames. And we finally have a new low right here. We created additional leg to a new low, and prices are safely reversing from here. If you're watching at this point on, it means you're enjoying the content. So I would kindly ask you to hit the like button, subscribe to the channel if you like to study day trading. And remember guys, the two-legged pullback is there, and we're only looking at it under the right circumstances at the key entry points. You don't have to worry about two-legged moves when you're not expecting a key entry point or a continuation of a trend. So God bless everybody.